Wow, 17,000 listings available on the Greater Vancouver board. I'm Christine Kopr with your market update for June 2025. Now, listen, this is an historic amount of available inventory. We haven't seen numbers like this for over 10 years in terms of the amount of inventory available for buyers right now in the Greater Vancouver region. But I wanted to share it. Last month, I actually did record a market update video. We had some technical issues. It was never published, and I'm going to publish it now because I listened to it again and I shared a lot of excellent information that I think will put a lot of what I'm going to talk about next into context because I don't want to cover it again in this video. So please check out that video. By the time you get this, that video will be published. So please take a listen. And now let's get to the numbers for June because the May numbers are out for the Greater Vancouver Real Estate Board. And we're going to take a deep dive into Vancouver West and East in terms of months of inventory and what's happening and other market updates. Okay, every month I like to go through the stats in my own table. It helps put everything into perspective for you. So let's get right to it. May, we saw 2,228 sales. That was up 3% month over month, so slight increase, but down 19% year over year. So if you recall, last spring we had a fairly active spring, nothing to write home about, but more of our average, closer to our 10-year average sales. This month, that is down 31% below the 10-year average. So when you hear people saying that the market is slow, this is what we're talking about. However, it's not dead, right? It's not zero. It's not that deals aren't happening. It's just a low amount of deals compared to our 10-year average. So when you're out there and trying to make decisions, whether you're a buyer or a seller, it goes two ways, right? Buyers, they hear about more inventory, which we're going to discuss, a lot more options. And so there sometimes isn't that sense of urgency. Sellers sometimes may be overly ambitious with respect to their pricing, but I can tell you when the properties are a special product, they present well and they're priced right, they have been selling. We've seen lots of people come through our open houses in the last couple of weeks, some of which I'll share with you momentarily. So the activity is muted. And as I discussed in my previous video for last month, make sure you go check it out. There's a lot of factors at play. I personally believe that there was a slow recovery coming from the high interest rate environment that we were in. We also, had a little bit, I think, of a holdback with our own federal election, which is now passed. You'd think that there might be some clearer paths, understanding what's going to happen to our economy, but while it's an old government, new leadership in front of the government, and it's to be seen what happens with the economy under their leadership from the domestic policies that they can control. And so it felt like the market was making its way back. As you can see here, this is the tail end of 2024, as I've discussed previously. I mean, again, you had some lower numbers here, but yeah, I mean, you're seeing numbers in October better than you are in the spring market. And you can see these are where those interest rates, start to get cut in 3 months, 3 to 6 months later is when you start to see that activity pick up in the marketplace. You could also see the inventory was lower back then. We felt like we were going to start to see just a little bit more activity in the market to more normalized levels. And then, of course, we had the US election, and then the tariff uncertainty, I think, is the number one thing that is holding a lot of buyers on the sidelines and why we're seeing that muted activity, in addition to our own domestic economy not quite performing on all cylinders. And so I think that's why we're seeing this, and therefore we're seeing an accumulation of inventory that we're going to talk about here in just a moment. And I also think that something to keep in mind, because the uncertainty is the thing that keeps people from taking action. And the uncertainty of making that $1 million decision or that $1 million purchase or sale, when there is clarity, I think you have a lot of people sitting on the sidelines that will be ready to get back into the market and things will turn around. And we know that the Vancouver market can shift very quickly. Am I suggesting that it's going to go from zero to hero rock star? No. What I'm suggesting is that the psychology can shift very quickly, and you can see more market participants get entering back into the market, and we'll start to see some of the culling of that excess inventory, and good properties that are priced well, present well in a good location without any hair on them will continue to attract stronger attention, and then we'll just get through that inventory sooner. Why I'm bringing this up is I think that there's an opportunity here because nobody knows exactly when we're going to have this tariff situation sorted out. Apparently, Mark Carney and President Trump have been in private negotiations recently. There hasn't been a lot of media attention on that, and perhaps some kind of a trade deal will transpire. Obviously, even if one does, there could still be some uncertainty. However, it might give some more confidence to the market because we're starting to see the stock market performing well. I mean, I own some TD and they're hitting new 52-week highs every day. And I'm not sure why, because I don't feel like the economy got any better, but perhaps there's just more confidence in what's coming down the pipeline. And so when buyers have more confidence, or maybe the tariffs don't impact them so much. If buyers' industries aren't as impacted, they're more confident in their own financial situations, they're taking action. And we see it every day because 2,200 sales have taken place. Those people were confident in the market. So the point is that there's probably an opportunity right now for buyers in this marketplace with tons of inventory, a lot of selection, probably some negotiating power, and they can cherry pick for the right property. So this could be the next, short to midterm period before things potentially turn around. Although, as we know, they can turn on a dime. So you can't really time a market. All you can do is see how market conditions and your own situation, how comfortable you feel right now, and make a plan according to that. And if it works, this might be your opportunity to get out there and start taking advantage of today's market conditions before they change. So now that we've addressed the sales, we're going to be looking at new listings. They clocked in at 6,620. So that was down 3% month over month. So that's nice. Not as much inventory as last month. We're up 4% year over year in terms of new inventory coming on the market. And with respect to new listings coming on in May, that was 9% above the 10-year average. In terms of active listings, wow, 17,094 listings. That's the most we've seen in over 10 years. It was up 5% month over month, up 26% year over year, and up 46% over the 10-year average. So when you hear about inventory, yes, we have more available selection for buyers right now than we have since 2014 was the last time that we had 17,000 available homes. And that was on the heels of the financial crisis in 2008, 2009. And then shortly thereafter, actually, it was after 2014 when things started to tighten up and things turned around. 2015, 2016 were crazy years. So go figure, markets can actually turn around quite quickly because we had just such accelerated sales volumes at that time, doing 5,000 sales a month. So we were able to chew through that very quickly. So one might, speculate if interest rates do come down in the latter half of this year because of a weakening economy, depending on your situation, that could reignite further activity on top of a tariff situation being sorted out between our two governments. That could also light a fire under this current marketplace. So again, keep in mind if you're considering buying or entering the market or doing a buy and a sell, this could actually be an opportune time for entering the marketplace or taking some action, and particularly taking a step up and making it into that next step up property because of the price differences between those higher price properties and the lower price properties. Definitely we're seeing there's more action in the lower price point. Anyhow, I digress. 17,000 listings. It'll be interesting to see where we end up in the fall. But the number one number I like to look at is months of inventory, and that tells us supply and demand. And when we're between 4 and 6 months of inventory, it's considered a balanced market. As you know, those rarely ever exist. We're usually at one side of the pendulum or the other. So 6 months of inventory and above is considered a buyer's market. There is more inventory, 17,000 homes, than there is demand, only 2,200 sales. And if we get new product, we'll continuously add to the inventory, and therefore that puts downward pressure on prices. When you're 4 months and below inventory is when you have upward pressure on prices. There's just not enough supply to meet the demand at that time. And we are now sitting at 7.7 months of inventory. This is actually better than I thought it was going to be because based on where we were with our sales, we were just lagging so much. And I could see the inventory coming. And I just thought we were going to probably end up with 8 months of inventory. We could possibly get there if this continues on, which it potentially could, until we reach some kind of agreement with the tariffs, and the confidence is restored. Just something to consider. Anyhow, it's a slow trickle up, which is nice. And I think that's why we're also seeing the price stability. So speaking of prices, the benchmark is sitting at 1.177, down 1% month over month, and now down 3% year over year. We're starting to see that rollover in pricing, and we're going to see that when we look into the specific markets coming up. And prices have held on strong. You can see, in the spring, we're sitting at like 1.2, and here we are kind of back to where we were, in December of last year. So, prices are holding up fairly well, down 5% or so, depending on where you're located, maybe 10. It just really depends on the product that you are in. So for that, please reach out to us and we can give you an update. We just did a CMA for a client of ours, and we'll get into the specifics of that later, but just to let you know that it's drastically different than what you see here for these broad statistics. Remember that GVR is the Greater Vancouver Realtor Board, which spans from Maple Ridge all the way to Whistler and everything in between, excluding the Fraser Valley. And this is just a look back at 2024, just seeing where we were last year in the spring and what kind of numbers we're seeing. So, 27, 28, 24. So well above what we're seeing today. And you can see we were like 9,000 to 14,000 total active listings. And we were just on the cusp of a seller's market. And you can see that reflected in the upward pressure on prices on the benchmark. And then that slowly came off at the end of the year. Then this year we had a little bit of an uptick and back down we go. Let's take a look at GVR. So detached homes, sales are down almost 23%. Your benchmark price is 1.997. That's down 3.2% year over year and down 1% month over month. Townhomes, the sales activity is down 10% year over year. Your benchmark price is sitting at 1.1. Down 3.4% year over year and just half a point month over month. And sales are down 19% year over year, and you're sitting at 757 for your benchmark price, down 2.4% year over year and 0.7 month over month. So months of inventory, just in terms of where price is headed, when we break it out the board, we went from 5 months of inventory in 2024 to 7.7 months of inventory in 2025. So it's 54% increase in inventory, as we saw. And you can see where that's really coming through is on the detached segment, up 57% year over year in terms of months of inventory. Townhomes are in that balanced market condition overall, up 46% year over year in terms of months of inventory, and condos sitting at 6.7 months of inventory, so up 46%. Okay, but let's hone into Vancouver West. So at the end of May, your sales were down 45% year over year. Your benchmark sitting at 3.36. That's down 5.2% year over year and down almost 2% month over month. I would say this is one segment, as you're going to see, lots of inventory. Townhome sales are up 22% year over year. So there's actually more sales in the month of May this year than there was last year. So that's positive. Your benchmark sitting at 1.419, down about 5% year over year in terms of price and just down half a point month over month in price. Condo sales are down 16% year over year for West Side condos. You're sitting at 839 for your price, down only 0.6 year over year and 1% month over month. Now, in terms of inventory, you can see that detached market's gone from 6.8 to 15.1 months of inventory. So that price point, the elevated price points are where you're seeing the most amount of accumulation of inventory, up 122% year over year. Townhomes, fairly flat, sitting at 3%. You saw the sales were kind of better than they were last year. And condos went from 5.8 to 7.2. So up 24% year over year. And the condos are sitting in that buyer's market. Townhomes are as well, but they've been kind of flat, kind of hanging around. They're on that cusp of that buyer's market. And the detached has gone from, a very typical, just on the cusp of a buyer's market to deep buyer's market territory in terms of 15 months of inventory. So Vancouver East, Sales are down almost 31% year over year, sitting at 1.828 for your benchmark price, which is down almost 3% year over year, with 1.3% month over month. So this is that rollover. We were doing quite well year over year, but we're starting to see some of these prices come off, just chip off a little bit. Nothing major, just a little bit at a time. So we've had a lot of price stability. Townhomes on the east side, in terms of sales, are down 26% year over year. Your benchmark price is at 1.120, down 1.2% year over year, and just 0.5% month over month. And your east side condo sales are down 26% year over year. Benchmark price is 696, down 3.2% year over year in terms of your benchmark price, and just 1% month over month. So where's prices going? Well, your inventory went from a balanced market and detached to a buyer's market in May, so up 84% with respect to that detached product. Now, please keep in mind, I think there's a lot of inventory in there that is geared towards multiplex and tear downs. So just keep that in mind, that that's the thing with that entry level in the east side, at least, is there's, that difference between what can you live in and what would you tear down. And so you get an accumulation of the stuff that's probably more unlivable inventory that accumulates. Product that you can actually move into that's affordable for families is, in demand for sure. And we're not building any more single detached houses, right? Most of them are getting torn down. Townhomes went from buyer's market territory last year into just on the cusp of, being in a balanced market, but skewed on this seller side, although we saw, price decreases there. So months of inventory up 46%. And condos went from just being in the cusp of a seller's market into buyer's market territory, and 49% increase in your months of inventory. So you can see those opportunities there for sure. We're sitting at about 17,000 homes, just like 100 more homes than we were at the end of May. I mean, it's very early into the month, but definitely the message here is it is a market made for buyers. Like mortgage rates, you could, for first-time home buyers, insured product, you can see specials at 3.84. The home price, pretty much we're down 5.5% from the peak, a little bit more depending on where you might be located. And inventory, this was up 160% when we're at 14,500 homes, and we're now at 17,000. So if anybody ever had complained about inventory, it is here. You have your options and you have the ability to shop for the right home for you at the right price, at the right pace. And I touched on this last month. Like, look, there was a revision down for our projected annual sales. Personally, I think if this trade war continues on, I don't know that we'll eke out as many sales as we did last year, given the way things are going. But I think if there's something positive comes out of this trade war situation, then yeah, I think we could actually have a pretty good back half of this year, especially if we see some further interest rate decreases, because I think the Bank of Canada is in a bit of a hampered spot right now. And here's just another visual in terms of helping you understand like where we are, like from peak pricing to where we are today, right? So it'd been like 1.250 to just under 1.2. So not too bad in the grand scheme of things, because remember, real estate isn't something that you trade, but something that's intended to be lived in or held for 5 to 10 years, because you have a J curve to get through over time, and the market isn't always crazy. Prices do go up and down, but as you can see through the variabilities, the longer the time in the market is the benefit of being in the real estate market for the long term. So mortgage rates, they all have come very close to being variable, and fixed rates are very, very close together. So they're becoming much more affordable. And the 5-year bond has ticked up a little bit. So that's your fixed rates. The Bank of Canada, I'm going to talk about in just a moment, they decided to hold rates. The bond market has been kind of tickering up a little bit here ever since like January. So that does impact our fixed rates. Some of the other things that have transpired is we had that Bank of Canada announcement earlier this week. They decided to hold interest rates where they were. They're in a hard spot because our economy is not performing. We have higher unemployment. Inflation actually came in at 1.7, but the sticky part of inflation that they monitor actually had a couple months of upward pressure. And so one of the fears that the Bank of Canada has is that we could see some more inflation. And part of that inflation came from, kind of panic buying before the tariffs come in. And Other types of household items like food, it's been really kind of sticky, hard to get at a better price. And of course, if you're buying local, things are a little bit more expensive typically. And so the Bank of Canada is a little bit concerned that if they dropped interest rates now to stimulate our economy, you could also increase inflation by having more activity, for example, in our housing market, more activity that could stimulate more inflation within the economy. And it would also reduce our dollar, which would therefore also create more inflation due to the US Canadian dollar relationship. So we'll see what happens. I think also if the economy is going to get hampered by these tariffs. If we end up in a recession, especially with the tariffs, that's one of the things I think, as I mentioned before, why I think we have such good price stability is one, we had the stress test. So people, while it was uncomfortable, people were stress tested to be able to deal with a decent increase in interest rates. So that's one thing that has been helpful for our Canadian banking system. But I also think that we haven't really seen a recession. And so if we start to see a lot of job loss, I think that's where we could start to see downward pressure on prices, at least here in BC. I mean, Toronto is a completely different animal. That's just, they've got a lot more going on there. So let's hope we don't have a recession, although technically I feel like our economy is lagging a little bit. Some people would argue we're in a recession already on a per capita basis. And having said all of that, the Bank of Canada may need to reserve some of those future interest rate decreases to stimulate the economy for a time where it has been validated by the data, because if they do it now, they don't have that tool in the future. So it's probably something they're trying to keep in their back pocket right now, depending on how things go with the trade situation and our overall economic performance. And other big news, of course, because of all of the excess inventory, and also from the presale market, of course, the inventory I speak of doesn't even include the presale inventory, which there is product that is not built, that is being sold, that is not being absorbed. And then there are a historic amount of purpose-built rentals as well as condos in construction. Developers chose to wait to sell those units, hoping that they were going to be able to sell them into a stronger market. Unfortunately, that market has not arrived, and there is a growing amount of presale inventory, which is creating downward pressure on prices as well, particularly in that presale market, because those prices really got out of reach for the average buyer. And there's definitely some price correcting going on in these markets where there is a lot of inventory coming. And so I think it's actually a perfect example. I know our governments like to take responsibility or believe that some of the policies that they implement to being market correctors, like the rent softening in Vancouver, etc., because of the Airbnb laws. But really what it is we have very high interest rates, which doesn't attract any investors because the numbers just don't make sense. It doesn't make sense to take on a mortgage and buy a property and rent it out to someone because you're going to be paying to house that person. So when investors' units come up, their mortgage renewals are coming up, they're going, this doesn't really make any sense. Or B, their tenants decide to leave. They're like, I'm going to go do something else with my money. And so you're starting to see that inventory come onto the market. The other policy that did actually benefit the market was the rental financing policy through CMHC, which gave preferential interest rates and financing to rent purpose-built rental construction. And so we have a historic amount of rental construction that has been completed and completing, and therefore a lot of inventory has come onto the market in that perspective as well, and therefore also creating downward pressure on rental prices. And so therefore, again, it doesn't attract further investors who are the main purchaser of that presale product. And now, that's basically what's happening. And then you've got municipalities that were very pro-development. So if you're looking at like Brentwood or Surrey, we were looking at some Surrey condos the other day, and for the product that we were looking at, and we tried to narrow it down to a smaller type of one-bedroom unit, we kept it between that 4 and 525 square feet range for a one bedroom. There was 92 active listings in downtown Surrey with only 8 sales in the last 30 days. So that's 10 months of inventory, and definitely the prices are much lower than what people paid for just in 2020, 2021. And there's more inventory coming in that market. Major developments are happening in Surrey. And that's why we also saw that big condo sale. You've probably heard about that last week on the weekend. One of the developers decided to blow out their remaining inventory. They sold out all of their inventory, but they had held back some penthouse units and a podium and decided to sell those later, hoping to achieve higher price points. And they did a one day sale, 25% discount to all of those units. My understanding is that they blew through that product, which also goes to show when homes are priced right, they will sell. There is an appetite for housing. We have people who have been waiting for many years now because of high interest rates, etc., who want to get into the market, who just want to have some security and hope that they're not catching a falling knife. And we see the demand. We recently listed a couple of properties. I'm going to share my screen here. So a couple of properties in False Creek. This is one of them. This one's actually been on the market for about 40 days. This one we just listed, and over the weekend, I mean, we had over, I would say, 20 groups through this property and received an offer right away. So it's a beautiful property. Now it's also in a market that's False Creek, on the seawall, wonderful product. It is leasehold, but we had about 20 groups through. And the same thing when we first listed our other property, which has been getting consistent showings, which shows that there is a demand and there are people who are just trying to make their numbers work, or they just need to get themselves organized, etc. So there definitely is a market out there. It's just, it needs to work in each stage of the game, and properties need to be priced appropriately. Coming back to the whole pre-sale market and demand, so one of the things that our federal government has recently done is made the GST rebatable for properties up to $1.5 million. So that's fantastic from the demand side. Obviously, they're trying to support that pre-sale new market, help lower the cost of new construction for first-time home buyers. You don't have to pay GST up to 1 million, and then it's a sliding scale down to 1.5. The catch is that you do have to pay it and then you get rebated back. So that's just something to keep in mind. But they are trying to lower the costs getting into the housing market. Now, that doesn't do anything for the resale market, but at least it's one step forward with respect to supporting the pre-sale market, bringing new homes to market. Because while the government thinks they're going to be able to build a lot more housing than we ever have, it's just not going to happen. And with these current pre-sales and developers that are actively marketing new product or shelving product because and even going bankrupt, it is an issue because we structurally do have a shortage of housing. That's something that is a real statistic for our country in the G7. And while we might have an oversupply, it is a short-term issue because this is going to put the halt on any future product. And once we sell through this product, and we are still going to have people come into this country, or we're going to have birth, whatnot, our population is going to increase. We will require more housing in the future. It's just right now we're in a short-term to mid-term oversupply, which is shelving any future product from coming on in the future. So again, this could be your time to shine or enter into the market. Anyhow, I'm Christine Kopr with Sotheby's Realty in Vancouver, BC, and that is my June market update. I look forward to connecting with you, and please make sure if you have any questions, let me know. Put them in the YouTube channel in the comments, or what data you'd like to see so we can touch on that in future videos. Thank you so much, and make sure you like and subscribe to the YouTube channel, to my newsletter, so you can get it every month into your inbox. All right, talk to you later.